Dear friends, welcome to Weekly View on Markets. In continuation of the technical chart patterns of previous week, the technical charts are showing very encouraging pattern, and Nifty and all other indices like mid cap index, small cap index, bank Nifty index, everything is going to give most probably a trend reversal signal. So that is going to be the highlight of this week. So let us look at the weekly performance and then we will discuss about the technical charts and the fundamentals. This week, Nifty ended with 203 points down with a cut of 1.14%, and Nifty ended at 17,624. Bank Nifty was resilient and it almost ended flat with just 15 points down. Mid cap index and small cap index outperformed the market during this week. Mid cap index gained about 203 points and small cap index gained 32 points. And India VIX is more or less remaining at around 11.63, that is quite stable. So now let us look at sectoral performances of this week. PSU Bank gained about 2.06%. There was a good upside on PSU banks. FMCG index gained about 0.99%, and oil and gas sector gained about 0.79%. Pharma stocks gained about 0.54%. Private banks also gained about 0.16% during the week. The outperformance came from banks, and outperformance was there in the mid cap and small cap stocks of these sectors during the week. So IT sector dragged the market. IT sector was down by more than 5% for the week. Infosys result was not up to the street expectation. So all the IT sectors stocks fell on Monday, and Infosys stock was down by more than 10% on Monday. And the outlook for IT sectors due to the slowdown in US and European markets, those economies, they are weighing heavily on the IT sector stocks. So that is why IT sector index lost more than 5%. Media stocks lost about 0.92%. Infrastructure stocks lost about 0.7%. Commodity stocks, NBFC sector stocks, auto sector stocks, they were marginally in the red. Rest all other sectors were more or less consolidating for this week. Now let us look at technical charts. So if we look at Nifty chart, the Nifty chart has been correcting. There is an intermediate correction with lower tops, lower bottom formation on the chart. But if we look at last 2 3 weeks development, the Nifty after making a low at 16,800 to 16,900 has gone up to 17,800. From there, for last 4 5 days, it has corrected during this week. And this correction, I was expecting the correction to happen, because if we look at the chart, I have drawn the inverted head and shoulder formation. The chart is in the process of now completing the second shoulder formation. The first inverted shoulder and inverted head formation is completed. When this Nifty closes about 17,900, that is a trend line which I have drawn, that will complete the second inverted shoulder formation. And this formation will give us a trend reversal signal. That means the lower tops, lower bottom formation will get reversed. Already, if you see, we have formed a higher top. The earlier top was at 17,800, and this time the Nifty has gone above 17,800 and then started correcting. So this move I was expecting, and if you see my last week's view, I had predicted that Nifty is in the process of giving a trend reversal. So this correction is to be bought. So this correction will end very soon, and Nifty will go above 17,900, and that is the time it will give the trend reversal signal. From there, we will see a uptrend resumption in the Nifty. We will see similar kind of formation in Nifty mid cap index also. If you look at the chart and the markings that I have made, Nifty mid cap index also, when it closes about 31,500, that time the trend reversal will happen. The inverted head and shoulder formation will get completed, and we will see further uptrend starting in the mid cap index. Similar kind of formation we are seeing in the Nifty small cap index also. The Nifty small cap index has to close above 9,400, and when it closes about 9,400, this inverted head and shoulder formation will get completed, and we'll see the resumption of the intermediate uptrend. The correction will come to an end. This is the bank nifty chart. In the bank nifty chart also, we are seeing a kind of formation of the inverted head and shoulder. The second shoulder formation is in the process. So it may take another view or 2 weeks. It is to be seen. But when bank nifty closes at above 43,200, it will complete the formation of inverted head and shoulder, and that will end the intermediate correction in the bank nifty, and we will see higher levels in the bank nifty. So this is coinciding with the quarterly results coming out from the many banks, and we have been seeing that banks have been posting very good results. HDFC Bank result has come out, which is very good. At the weekend, ICICI Bank result has come out, which is also uh, beat on the street expectation. So this gives me a indication that sooner bank nifty will end its correction, and it will give a trend reversal, and we'll see higher levels. Bank and financials results will be very good. So that is giving the fundamental support to the chart structure. So that is why it is good time to buy stocks. We are going to see the end of the intermediate correction for which is happening for last 1.5 year, and the Nifty, Bank Nifty, mid cap index, small cap index, all are showing a trend reversal kind of formation. So I am very confident that these trend reversal will happen in next few days time, and we will see Nifty will start making, or markets will start making higher tops and higher bottom. We will see higher levels in the market. This is supported by various fundamentals of the market, like inflation has peaked out. RBI has stopped raising the interest rate. In last MPC meeting, RBI has paused interest rate hike. So they are very confident now that inflation figures are stabilizing and inflation will come down. This week, WPI inflation numbers have come, and it has come at a 29-month low. It has come at 1.34, and previous week the CPI inflation figure has come. For the first time, after about 1.5 year, it has come below 6%. That is at 5.48. CPI inflation has come at 5.48, and WPI inflation, wholesale inflation, has come at 1.34. So RBI had some idea on these figures. That is how they paused the rate in the last MPC meeting. So now this CPI inflation and wholesale inflation, they are coming down. It is in a downward trend. So soon we'll see interest rates stabilizing, and maybe after 6 months or 1 year, RBI may start thinking cutting the rates. So the rate hike cycle seems to come to an end, and we will soon see, maybe within next 6 months, 1 year, or 1.5 year, the rate cut cycle will start. That is the time we will see big rally in the market. So the charts are indicating that they are giving a trend reversal, and we are preparing for the next rally in the market. IIP data is encouraging. The core sector has grown by 4.3% in the month of March, and ISD UNR rate, that is US dollar rate, is at 82.07. This has been the rupee, IN, and US dollar rates has stabilized. It has been hovering around 82 and 81 for the past 2 or 3 months. And dollar index also is stabilizing at around 101, 102 level. So this is good for our economy and good for many companies, for exporters, and for IT sector and all. The stable rupee against dollar helps the businesses. So gold price is still at above 60,000 mark. It is at 60,820. So money is moving from US dollar to the gold after collapse of several banks in US and then Europe. The dollar index has come down from 114 to 101 level. That means money has moved from dollars to the gold, because gold is considered as a safe haven investment. So probably the central banks earlier, they were trying to buy US dollars. Now they are buying into the gold. That is how the gold prices are at the record high level. Crude price is stable at around 81.76. So after the OPEC cut of production about 2 weeks back, crude shot up to 86 dollar per barrel, but now it has come down to 81.76. So if crude oil stabilizes around these levels, it will be good for Indian economy, and also good for mm, the markets, as the stable crude price will have a good impact on the inflation. That will help RBI in not raising the interest rate further. So, and when the inflation cools off or inflation stabilizes, the companies are able to manage their business well, and their margins and profits will go up. So that is the confidence I think the markets are getting right now by looking at all the data, and that is what reflection we are seeing in the charts also. FI have sold 4,621 crore. DIIs have brought 3,024 crore during this week in equity. The continuous flow into SIPs by retail investors, and that money coming as a BII investment into the stock market, is giving lot of stability into the Indian markets. And sooner or later we will see FII also buying into the Indian markets. At the weekend, Reliance Industries and ICICI Bank have announced the results. Both the results are good. Reliance Industries oil to gas sector, the Reliance retail business, and also Reliance Geo business. They have all done well, and the management has given very good commentary regarding future of the business. We'll see a good market reaction on Monday. And ICICI Bank also announced their results. The results are actually beating the street expectation. Their asset quality, net interest income, then the overall profits, everything is good in ICICI Bank. So Monday, the market will react to these results, and we will see many more companies announcing their results in the coming week, and market will react to those results. If there is any dip in the market, I am sure that will be a good buying opportunity for the investors, and they have to choose quality stocks. And those who are investing in mutual funds, they should continue investing in their SIPs. And people who have a time frame of 3 to 4 years, they can look at investing lump sum in mutual funds at this point of time. So we will see good times returning to market in another 6 months to 1 year time. So this is all for this week. So if you like my channel, please subscribe to the channel, share with your friends, and post your comments, which I will reply. We will meet again next week. Thank you.